Hello, I'm Lois Carrier. Today we're continuing some segments about learning principles from some of Warren Buffett's quotes. In case you have forgotten who Warren Buffett is, you can Google him, but I can tell you he started investing with $100 and turned it into $30 billion. That was B with a B. We have mentioned the market's reaction to the past election. It dropped like a rock and then rebounded quickly, just overnight. So what happened? What was behind the market's erratic behavior? Human beings who got scared and jumped out of the market, fear, and these human beings who then realized it might be okay and jumped back into the market, greed. They thought they could make more money. So according to Buffett, fear and greed are the two human emotions that drive the market's behavior, up and down. Another quote I love, you're dealing with a lot of silly people in the market. It's like a great big casino and everyone else is boozing. If you can stick with Pepsi, you should be okay. So I'd like to use something we call the fear and greed curve. As you can see, this investor, we're going to call him Joe, started with $1,000 and it grew to $1,200. So did Joe make $200? Nope, only if he sold. But guess what? Joe doesn't want to sell because he has a feeling if he stays in a little longer, he's going to make a little more money, and that feeling is greed. Now pay attention. When Joe bought the investment, the broker who sold it to him made a commission. Now look what happens next. The $1,200 investment drops to a value of only $800. Did Joe lose money? The answer is no, if he didn't sell. But Joe, knowing better, he sold and got out of the market, which meant he actually lost that money. That feeling that drove Joe to sell was fear. Pay attention again. The broker who sold Joe the investment makes another commission. So whether he sold or bought it, he made a commission both ways. So who made the money? Not Joe. The salesperson made the money, another commission. So who besides the salespeople buy when most people are getting out of the market? Long-term investors, people who know the market will go back up and who do not follow the herd. You know, the herd we witnessed election night and the morning after. So remember, there's always a buyer for every seller, and what hurts one will help the other. And this is exactly what you just saw with a fear and greed curve. Thanks so much.